Mass adoption in crypto is actively happening, and after 7 years of investing in this space, I've literally never been more excited to go into a new year than I am for 2025. In this video, I'll talk about my top 5 trends to capitalize on as a crypto investor in the new year. Now let's get into it. But first, I want to introduce you guys to someone. This is my quantitative. She's been helping me out with this analysis. All right, so in seriousness, let's talk trends in crypto for the new year. And the 5 I'm going to highlight today both have data and a narrative to back them up. And the first one I'm going to talk about is AI on-chain agents. Now, a ton has been happening in this space. It's enough to keep up with that you could specialize only in this and still not know everything that was happening. But I will say it looks more and more like this could be the play of the cycle, at least in DeFi. And I'll share that recently I left my home in the Appalachian Highlands of Pennsylvania to take a trip to New York City for some IRL meetings with some various builders and people in crypto. And all everybody's talking about is on-chain agents. And I think it makes a lot of sense because crypto is digital money. So it makes sense that digital entities would naturally use digital money. And if you think back to DAOs, which were really all the rage back in 2021, we got the decentralized part sometimes with governance, but we didn't have the autonomous part, right? Most DAOs were still Discord groups basically, or forums that would vote on things. But with the autonomous part, if you actually incorporated some of these agents into it, you could actually have a decentralized autonomous organization. All right, so let's talk a bit more about these agents. So the first thing to note, and this is one reason why I think this is going to be a powerful narrative, AI16Z, one of the leading funds in Silicon Valley. They released their big ideas for 2025. Awesome, right? Well, let's see what they have to say about crypto. So we go to their crypto section, and there's a few things they highlight. AI needs a wallet of its own to act agentically. So basically, these are opportunities they think that would be good to build. So mentioning wallets for AI agents, decentralized autonomous chatbots. So remember we talked about DAOs, right? This is a chatbot that's both decentralized and able to operate on its own. Proof of personhood. So that's distinct from the AI agents, right? That's how do you distinguish a person from AI when interacting on chain or anywhere else. They have prediction markets, stablecoins, which we'll talk about later in this video, and some other things as well. But I think what I really want to highlight is a few of their top ideas here. They relate to these sorts of decentralized entities. Similarly, if you look at the trending repositories monthly on GitHub right now, the AI16Z ELIZA framework for building on-chain AI agents is the #1 trending repository across all of GitHub, not just in crypto. And this is what I'm hearing, I'm telling you when I go and talk to people, even in person, is that developers who were not previously interested in crypto for the first time in years are starting to enter the space, and they're entering it to do things like this, to experiment with these autonomous agents. So you've got AI16Z. And then there's a ton of other infrastructure things related to these AI agents that are just popping off. You have Virtuals, which has been a top performer recently, and this is like a launchpad or marketplace for AI on-chain agents on Base. And what's interesting with this is that many of these are basically influencers. They're influencers that you can invest in, but that also have their own social media accounts and oftentimes have dedicated followings. For example, you have this AI XBT one, and this one, it aggregates different crypto news, stats, everything, and then performs analysis on it. And honestly, some of it's pretty good. It's got CowSwap here talking about its revenue and how it's expanding. I mean, I think a lot of influencers are probably shaking right now, or at least they should be, because this can already do what a lot of people do. And I know multiple people who say they've found things early from this AI XBT. I mean, I know personally it's making me consider what type of content I like to put out. And if you look at the stats related to virtuals, then you can see that there was a massive spike at the end of November, and it's since quieted down from then. However, the number of new launches is still significantly above where it was even earlier in November. So one trend to watch will be whether the number of new agents being launched on both virtuals and other launch pads continues to increase. And I know some have predicted that there could be hundreds of thousands or millions even of these agents live by the end of 2025. I think it's certainly possible if more of them can find product market fit. And that's one of the, I would say probably the top trend to watch is how this space evolves. Some other interesting infrastructure plays to note is there's Based AI, which is a decentralized artificial intelligence network focused on privacy and security. And its goal is basically to build an autonomous blockchain-based platform where these AI agents that they call creatures can collaborate. And this is their website. And Based AI has also been one of the more popular launchpad infrastructure plays to launch an agent on. The second trend to watch in crypto for 2025 is the growth in stablecoins. And stablecoins is probably the highest signal metric about the crypto market, but also one of the most overlooked. And so let's talk about stablecoins. This is the chart of total stablecoin supply since mid-2021. And if you look here, zoom in, then you can see that since the start of November, really since the US presidential election, this has just been going insane. It's grown by $30 billion since then, which is an average of $750 billion every single day for over a month, crossing $200 billion. And so this is significant for a few reasons. First, it can be thought of as a proxy for total liquidity entering the crypto market. So you see here how it went up in 2021, early 2022, completely crashed, bottomed out in mid 2023, and then its growth, and we talked about this at the time when it started to happen, its growth was a sign that money was re-entering the crypto market. You can see that it stagnated or only increased a little bit earlier this year, and then as the market does better, stablecoins tend to increase because people are depositing money into crypto via stablecoins, and then they are using that to buy other things on chain. And some of those things are naturally going to find their way into the on-chain ecosystem. That's one reason why stablecoins are significant. The other reason is that it's one of the few areas of crypto that has found clear product market fit outside of speculation. Let's go over to Artemis. Artemis tracks peer-to-peer transactions with stablecoins. And if you look at the total here, go back to say early 2020, you were looking at a couple $2 billion a month in stablecoins transacted. Now let's look at this month, $147 billion of stablecoins transacted, and this is only peer-to-peer. So this is stablecoins being sent one wallet to another. It's not smart contracts, it's not swaps, it's not perps, peer-to-peer transactions. And so what does this tell you? This tells you that more and more people are actually using these stablecoins for payments. And oftentimes they're using them for payments in parts of the world where it's tough to access US dollars. Here's another measure of the product market fit. Tether, in the first half of 2024, reported a profit of $5.2 billion. Profit. In Tether, I don't have the exact number in front of me, but they don't have many employees. They have something like a few dozen. So you have Tether doing huge amounts of profit per employee. And then to round things off, you've got Y Combinator, which is certainly one of the most well-known incubators in Silicon Valley. In their requests for startups for 2025, they mentioned stablecoins as one of the sections in which they are looking for startups. And if you look at the things they call out, they talk about the black cloud being regulation, which with the regulatory future looking promising, with crypto-friendly government officials being elected. They talk about stablecoin payment volumes being huge and being over a fifth of MasterCard's volume. They talk about 30% of global remittances being facilitated through stablecoins. I think this is very quickly going to get over 50% and potentially well over 50%. And so basically Y Combinator is now looking for startups that relate to stablecoins. All right, so that's great, but how can you take advantage of this? One way to do it would be, even though most of these top stablecoins that are being used to transact do not have tokens, what you could do is you could instead look at the breakdown by chain, and you could say, well, you're not going to invest in the token because you can't invest in Tether, but you could invest in the chain that this is happening on, and you would see that it's predominantly Ethereum, Tron, and BNB, with Ethereum and Tron being well ahead of the others. The other thing you could do is you could look at some of the other stablecoins that are growing quickly. For example, take Athena. Athena's USDE is now the third largest stablecoin, growing over 80% just in the past month. And if you look at the supply here, you can see that it's grown from only launching a year ago to now having nearly $6 billion of supply. And Athena is interesting because to mint it, you deposit other assets. However, it maintains its peg through delta neutral hedging across centralized and decentralized venues. But this has just gone, I would say parabolic recently. It's maybe slowed down a little the past week. And so the big question is, first, can it continue its growth? But if it does, could it start to take some of the share from USDC and USDT, first in terms of crypto native applications? So for example, serving as a pair on ETH and other assets that are traded heavily on chain. And then could it eventually start to be used for some of the things that other stablecoins are being used for? But USDC, USDT, if they're in the high tens of billions of dollars in market cap right now, USDE is of course much smaller, but if it could get up into 10, 20, $30 billion, then that's a massive opportunity. Another interesting one to look at is Usual. So Usual, basically the idea behind Usual calls itself a decentralized RWA stablecoin. It's grown from $0 over the summer to $856 million in supply now. And basically the idea behind Usual is it's an on-chain Tether or Circle, at least as much as on-chain as it can be. So Tether and Circle, they're not passing on the yield to token holders. There's no way to invest in them if you're a normal person, right? Of course, there are private investors, but Usual will soon have a token. They were doing some preparations for an airdrop, I believe, and they will have a token one can invest in, and then they're passing on some of that yield to users. So Usual is basically trying to be the on-chain version of Circle and Tether. Big goal, but if it could happen, then massive potential, as we saw from this huge profit Tether was making earlier. By the way, if you want to learn about these sorts of trends early, every week in my newsletter, I cover top trends, readings, and on-chain analysis for narratives that are starting to break out. For example, here's a recent issue where we talked about Virtual's AI agents, as well as other things like chains that were reaching all-time highs in DeFi deposits. The third trend for 2025 is increased institutional and maybe even nation-state adoption of Bitcoin. 2024 was a landmark year in terms of institutional acceptance of Bitcoin. I think this is best represented by the Bitcoin ETFs. And if we look here on Farside Investors, their website where they track ETF flows, then we can see that since launching last January, in total, the ETFs have grown to over $35 billion of Bitcoin held. And you can see this has just consistently gone up throughout this year. And remember that the price was not going up for this entire period. The price had peaked over here and then was kind of stagnant or down. But the total amount actually held in the ETFs just kept going up. Just keeps going up because people are DCAing in. They're buying Bitcoin with their retirement accounts and via ETFs every paycheck. And so the total amount that's being taken off the market, brought into the ETFs, just keeps going up. And so the first trend to watch with this is, does this keep going up in the new year, right? Do we get $40 billion, $50 billion, maybe $100 billion of Bitcoin held in ETFs? And I think that moving forward, this amount of Bitcoin that's taken off the market as supply to go into the ETFs is probably going to be as significant in terms of supply and demand effects as the halving itself, especially if this continues to gain momentum and acceptance as something that people put even a few percentage points of their retirement, and just think of the amount of money that's held in retirement accounts. And then not only Bitcoin, but recently Ethereum ETFs have started to grow as well. There was a while where they were actually, I think, a hindrance because you had so many redemptions from Grayscale. But if you look at the chart here, then you can see that in recent months, same thing that was happening with Bitcoin is happening with Ethereum, where people are steadily accumulating it into the ETFs. And if you look here, for example, you can see that in total on a typical day now, there's hundreds of millions of dollars being bought in net into the Ethereum ETFs. And so what I would want to watch here would be does this continue, right? Does the amount of Ethereum that's held in ETFs continue? Because if it continues to grow, then what you're going to see is the supply of Ethereum that's actually on the market able to buy is going to be lower. And so naturally supply and demand is going to drive the price up. And that's not all that's happening with institutional acceptance of Bitcoin. You have some calls even within the US government to build a strategic Bitcoin reserve. Here is Senator Cynthia Lummis tweeting out, all caps, we are going to build a strategic Bitcoin reserve. And if this is able to happen, in any meaningful way, especially from the United States, then I think you're going to see an arms race of sorts where different countries are suddenly racing to say, okay, we better build a Bitcoin reserve, just like we have with gold. And recently, Mike Novogratz went on Bloomberg, and he predicted that if this happened, if nation states started buying Bitcoin, that it would soar to over $500,000 per coin if the US creates a Bitcoin reserve. And of course, that's a very aggressive target. However, if you consider what would actually be happening in that scenario where you have the functionally unlimited, from the perspective of crypto markets, budgets of the governments around the world, then that would be buying pressure unlike anything we've seen in previous cycles. So in this trend, I would watch not only the ETF flows, but also watch, is there actually a push in the United States and other countries to create strategic Bitcoin reserves? Because if it happens, it could end up being the most significant factor on prices in the crypto market this year. The fourth crypto trend to watch for 2025 is the growth in deposits in volume for decentralized finance. After all, for a long time, crypto's main promise was that it would reinvent the financial system. And while some people have had concerns that that's happening slower than they expected, if you look at the numbers over the past year, the amount of actual deposits in decentralized finance protocols has soared to over $200 billion, a new all-time high. And the total amount traded on decentralized exchanges has also soared to an all-time high. If you look at it monthly, November was the highest month ever with $377 billion traded on decentralized exchanges. And so what I'm watching for this year is, does this trend continue? Do we see the total amount of deposits race higher? And a lot of this growth is a result of price increases in crypto, since a lot of crypto deposits, DeFi, are naturally going to be Ethereum, Solana, Bitcoin, and other tokens. However, if you look at many of these chains individually, you'd see that it's also a function of more assets actually moving into DeFi from simply being held in wallets on chain. So one trend to watch is, does this go up to, say, 300, 400, even $500 billion? Likewise, if you look at decentralized exchanges, I'd really like to see this DEX volume go higher. You can see it's kind of been hovering around an all-time high in recent weeks. For a continuation of this trend, I would want to see this thoroughly break out into a new level where it's consistently doing well over $100 billion a week. And I'd like to see this DEX versus CEX dominance go up. Right now we're at about 35%. I'd like to see that go up to 50% or more, right? Where more than half of the actual spot trading is occurring on decentralized exchanges. And then the fifth top trend to watch in crypto in 2025 is the growth in on-chain perps. Perps, short for perpetuals, are a form of derivative. And as far as generating profit, they are one of the top products in the world of crypto. However, they've historically almost entirely been on centralized exchanges. Recently, that's started to change. If you go back to 2022, there were fewer than 2% of perps were actually traded on decentralized exchanges. Fast forward to today, it's nearly 5%. And I think a lot of this is from better scaling solutions being launched, as well as a general increase in on-chain user experience. But the great thing about DeFi is, first off, you avoid situations like we saw with a certain exchange, FTX, because the actual collateral, it's all going to be visible on chain. Your deposits are going to be visible on chain. You're connecting from your wallet, so you don't have to worry about many of the pitfalls that go with centralized exchanges. Even if like some of these things they're on, for example, their own app chain, so it's not quite as decentralized. You still have that transparency available. And then on top of that, trading on chain allows for these sorts of exchanges to do much more rapid launches and rapid prototyping of new products, so you can get a lot of innovation. And the biggest winner in this sector recently has been Hyperliquid. In recent months, both the deposits and the volume on Hyperliquid have gone completely crazy, rocketing to over $4 billion of total value locked, with billions of dollars of perps volume every single day. So it's the largest perp DEX by virtually every metric now. And one thing that's important to note is that this growth has continued even post airdrop. Now, note this TVL growth is in part from the Hyperliquid hype token. However, notice that the volume has actually stayed fairly high, even following the airdrop. It's significantly higher than what it was over the summer. And I think a lot of this is that it's a good product. Honestly, it's a product that I have used myself from time to time, even following the airdrop. And it feels like you're using a centralized exchange. The difference being you connect through your wallet, which is going to be more familiar to people who use DeFi. And again, like I mentioned before, you get those benefits of added transparency. If this trend continues and perp DEXes are able to capture 10, 15, 20% market share in the perp space, then the leading perp DEXes like Hyperliquid are going to be incredible beneficiaries of that. Let me know down in the comments which crypto trends you're looking at for 2025. And if you want to see more videos like this, be sure to like and subscribe. Until next time, this is Dynamo DeFi.